Hello guys, welcome back to ESENtaxa here in a new video in which I'm going to compare the forfait regime in Italy versus the forfait regime in Belgium. Yes, also Belgium has a sort of forfait regime and it actually has a different name, but it's quite similar to the Italian forfait regime that maybe it's worth to make a video and compare these two countries, because if you're thinking to start up your new activity in one of the European countries, it's better to understand these startup regimes that might help you to spare a lot of taxes at the beginning of your business. If you're new to this channel, ESENtaxa talks about how to optimize indeed taxes if you're relocating in a specific country in Europe, and we are the #1 channel that in English language explains all these tax strategies, tax planning all around Europe, and we are #1 channel for the Italian tax system. We are going very in details and we explain all the details in the law, unfamiliar tax schemes that most likely you don't find anyone else on any internet platforms. Okay, now going back to today's topic on this video, I want to compare these two tax regimes because I've found some parallelism, some similarities, and also some differences that might allow you to choose which country might be the best for your startup business. Now, we have in Italy the famous forfait regime, which is basically has this name because the state gives you a forfait amount of tax, a forfait amount that is considered by the state forfait expenses. Even if you didn't make those expenses, they give you for granted that you had those expenses. It's a virtual amount of tax-free space, regardless if you really had those expenses or not. That's the reason why it's called forfait regime. In Belgium, it's something similar called franchise TVA, TVA actually, and the name it's different because the name is basically it's related to the fact that when you open a business in Belgium you don't add VAT on your invoices, and then below that, at the top of that, you can also have a fixed amount of expenses, a virtual one that you can basically benefit from. Now let's compare the two tax regimes. Now, why they have this similarity? The first similarity actually is exactly the same thing. The same positive thing is that in both cases you don't add VAT. That's why it's called TVA, because TVA in French language means VAT. Yeah? So in both cases, so this is Italy and this is Belgium. In both cases the VAT is zero because you don't have to apply it at the top of your invoices. So when you issue invoices, you don't have to apply the VAT, and that makes you more competitive on the local market. So inside the Italian market, you don't add the VAT. When you have final clients, final customers, individual final customers, you're more competitive in the market. Same for Belgium. Another difference here, which is not a similarity, is that this works only for individual, while in Belgium works for individuals and also for small, medium enterprise, okay, SME. So you can also have a small company, you open up a company in Belgium, you can incorporate a company, and you can apply the franchise TVA if stay below a certain limit, and now we are going to talk about the limit, which is a very important point. So it's possible to apply for both, while in Italy it's only for individual. Another difference, which is also a point in common, is that in Belgium you have 30% forfait deduction, the concept that I was explaining at the beginning of this video. We have 30% deduction regardless if you have made those expenses or not. But in Belgium it's really interesting because if your real expenses, when you make your bookkeeping and you realize that your real expenses passes in terms of amount the 30% of your revenue, then you can apply the real expenses. So basically, the Belgian state tells you this: if your real expenses passes in terms of value your 30% virtual expenses, then you can apply the real expenses. Otherwise, you can switch to 30% expenses for forfait one. So the Belgian state says, as soon as it's more convenient for you, the real one, switch to the real one. Otherwise, you keep the virtual. So this is a very interesting point. While in Italy, the forfait percentage can span from 22% up to 60%. So here is an interval of forfeit amount of money that you can deduct virtually, because depends, for the forfeit regime in Italy, depends on the type of activity. If you are a consultant, most likely you don't have many expenses. You work with your laptop and that's it. While if you're exchanging, if you're trading goods, if you have, for example, if you're doing e-commerce, most likely you need to have more expenses, because you purchase your product, then you resell them back. And here, the Italian states previewed 6% expenses. So, which means that only 40% of your revenue will be considered profit, okay? So this, it's a percentage that depends based on the type of activity. And another important point here is the social security. In Belgium, we have only one type of social security, which is 20.5% of your profit, okay? And unfortunately, there is in Belgium a fixed amount that you always have to pay. So this percentage is calculated based on a minimum amount of revenue, which is 17,000 per year. So by default, even if you make zero revenue, you have to pay 20.5% on 17, which is around 3.5 thousand euro, 3.5k, okay? So this is what you have to pay regardless if you're making money or not in Belgium. While in Italy, the social security is a little bit higher, so it's 24.5% or can be 26.23%, these two percentages. But in Italy, based on the type of activity, so here still we are depends on the type of activity, we might have a fixed one, which is by chance it's considering the same as in Belgium, the same minimum wage per year as a profit. So you have to pay 24.5 on 17,000, regardless you're making money or not, based on certain type of activity. Or here you paid zero as a social security if you're making zero as a revenue, okay? This is, for example, is applicable for consultant. In Italy, if you're a consultant, a freelancer consultant, you most likely have to apply for this one. In the rest of the cases, most likely you have to apply for this one. So in Italy, it very depends, both social security and forfeit deduction depends from the type of activity, while in Belgium is always the same. So this is also another difference, very interesting. And now let's talk about the taxation. Taxation, extremely important. So in Belgium, you are subject to the income tax bracket rates when after having deducted the virtual expenses and after having deducted your social security. And here in Belgium are quite high, 25% up to 50%, while in Italy the taxation is flat. It's 5% the first 5 years, and then it's 15% after 5 years. So the first 5 years are considered a startup activity, if this is your activity performed for the first time ever. While Belgium doesn't have this difference, you can run your franchise TVA as long as you want, but you will be subject to ordinary Belgium tax bracket rates. And finally, most important one is the limit. In Italy, it's 85,000 euro per year, above which you exit your forfait regime, because you have to stay below this threshold, while in Belgium it's very low, it's 25,000 euro only. Okay, so this has to be keep in mind if you want to start up a new business in Belgium. It's 25,000 euro per year, which makes the taxation very low in Belgium. So it's true that you're paying using your tax bracket system in Belgium, but 25% on, no, not on 25,000, because you have to remove the 30% of the expenses, then you remove the IMPS, the social security here, so you remain with a so low income in Belgium that thanks to some default deduction that the Belgium state gives you, here you pay for real, staying below this threshold, something like 16% the overall, okay? While in Italy, it's true that you have up to 85,000 euro as threshold, but if you stay in the first 5 years, you might have a range between 24 down to 12, because either the percentage, the forfeit deduction, and either the social security change based on your type of activity. And after 5 years, your social security and taxes overall combined will be between 27% down to 17% as well, okay? So this is the combined taxes and social security, 24 if you have less deduction, down to 12 if you have more deduction for the first 5 years, and this 27 down to 17, this is the other interval if you stay in the 15%, so after 5 years. So you see in Italy also the percentages containing social security and taxes together varies, while in Belgium it is always the same, 16%. In this 16% in Belgium, maybe 16 point something, I consider it also included social security. Okay, it's an overall taxation that I've made just to, for simplicity reasons, to explain you the real benefit, the real cost of these tax regimes. Okay, I try to summarize and squeeze both tax regimes at the same time in the same video and comparing each other as well as possible. I hope you understood well the video, I was clear. Thank you for watching this video. If you are interested to evaluate Belgium or Italy, the two countries, if you are a startup activity, in the description below the video you have our Calendly link in which you can basically call us. You can book a consultation of 20 minutes also if you have a few questions, 1 hour if you have more questions, or a tax simulation that we can tell you exactly if you have also other business how much with numbers tax-wise the country makes sense or not, or you also have option to have 2 hours consultation with tax simulation included, in which we can follow up you through several months. Okay, and don't forget to subscribe to the channel, notification bell and like button to be always updated whenever we release this kind of video. Thank you, see you to the next time, bye.